chopping around a little bit, thinking that the Fed may have actually done this thing successfully. And what I mean by this thing is engineer the cycle for inflation to normalize back down to the 2.5% area where the Fed likes to keep it as its long run average without unwinding the labor market. Obviously, we had a couple of months there where the increase in unemployment rate was accelerating, but now we just had the first month where the unemployment rate actually fell from 4.2% to 4.051% unrounded, which is actually just 1 point away from being rounded down to 4%. So we have that, and then we also have non-farm payrolls, which greatly exceeded economist expectations. If you take a look at the Bloomberg's distribution of analyst expectations on a standard distribution, 254,000 jobs being added, that was a 3 sigma beat. That was 3 standard deviations higher than the mean analyst estimate. So needless to say, this jobs report blew everybody out of the water. And as a result, risk assets are loving it. Bitcoin is obviously now back above that $62,000 mark. And there seems to be a bit more clarity about what the end of this cycle is going to look like. Even though the Fed may be slowing down the pace of its rate cuts, the reality is growth is still strong in the United States, which means earnings are strong, which means risk assets still look like a buy, particularly as rates come down. Those less risky assets like U.S. Treasuries and corporate bonds may not be as enticing anymore, so people start to rotate into higher risk corporate bonds, risk assets like the S&P 500, the NASDAQ, and of course, our favorite Bitcoin.
Yeah, of course. I mean, like you said,
better economic data than is expected. It's surprising to the upside. And so if this can hold, if this can continue moving higher, that means U.S. markets, it's off to the races. We avert recession. The Fed is cutting rates into a growth rebound. Commodities are doing well because demand is very good. Different manufacturing and services reports are showcasing strong consumer demand. And so really, it just means it's all off to the races. Recession averted. The Fed lowers the cost of capital. That means it's a field day for risk assets, Bitcoin included.
Yeah, Bitcoin included. I mean, we're seeing it rally today. It does make me ask, though, you know, all this good news is coming awfully close to an election.
Yeah, certainly. And, you know, I have spoken with some people about that. Obviously, the Fed is technically a separate institution, but we've seen historically that they do make decisions based on what the president, particularly the incumbent president, would like to have happen. And so a lot of people were saying that a rate cut should have come a lot earlier in the summer. Now you see that since the Fed is cutting into a growth rebound, a lot of people are arguing the Fed may have cut too early, which if you're making the argument that the Fed is a separate institution from the government, what the Fed did on September 18th by cutting rates by 50 basis points probably doesn't help your case there, because now it is really supporting the economic data. It seems that right around the time the Fed, the halving, we're approaching the 6-month mark. And so Bitcoin has its own native reasons for why it chops around so much. But a lot of what has happened over the last 6 months, what has characterized these kind of volatile swings up and down, this really boring but choppy consolidation, has been a shift from short-term holders to long-term holders. And what I mean by that is everybody who has a Bitcoin that is less than 3 months old is considered a short-term holder. These holders are very prominent during bull markets. Think about this, you know, when the S&P 500 is rallying and grandma calls you and asks if it's time to get in, that's an example of a short-term holder. Or somebody who you're talking to at the water cooler during work and they ask you about whether they should buy X stock or Y stock, that's a short-term holder. These kind of flighty participants that enter into a bull market because of the euphoria and mania associated with it. That's what drove Bitcoin to its all-time highs the first time around $74,000. That was driven by short-term holders coming into the market and holding more of that Bitcoin supply. Over the last 7 months now, what we've seen since early March, when Bitcoin actually hit this all-time high, is a redistribution from short-term holders to long-term holders, both as short-term holders sell to those longer-term holders that are older than 3 months, who are going to hold their Bitcoin for a very long time, but also coins that are growing up and aging from 3 months to older than 3 months. And so and the very third thing is global liquidity. So we're seeing global liquidity, which is the capacity of capital, balance sheet capacity, rise. This is balance sheet capacity on the United States government's balance sheet, as well as private balance sheets too. One of the big reasons this is rising is because of the pace of debt issuance, not just from the United States, but from other G7, G10, G20 countries. We are raising and issuing more and more debt than we ever have before. That debt needs to be purchased by somebody. It's purchased by private banks. And of course, some of it at the margin is taken in by the Fed. That expands the capacity of balance sheets because more collateral means more lending capacity. And so ultimately, that causes global liquidity to rise, and that causes risk assets to do very well. And so not only are central banks cutting rates, but balance sheets are expanding, and the US economy and other global economies, barring China and barring Japan, who has its own economic struggles, are in expansion mode. Those are the three things that I'm looking at that tell me Q4 is going to be excellent for risk assets. And of course, Bitcoin being a very highly sensitive, high beta risk asset stands to do extremely well heading into Q4 if all those conditions remain intact.
Interesting. Okay. Yeah. So some analysts are obviously saying that this is the most favorable environment for Bitcoin since 2020. It sounds like you shared that sentiment here.
I certainly do share that sentiment. Obviously, you remember in 2020, we were
before start selling off in these types of market conditions. If there is a downturn, or is it more of a solid foundation that we're seeing at this level?
Absolutely. So there's an increasingly solid foundation, but there's always a risk that people sell Bitcoin in order to jump into other more safe, traditionally safer investments. Bitcoin, of course, you and I understand it as kind of this apex risk-off asset. It's absolutely scarce. It's geopolitically neutral. So honestly, it's what you want to hold during times of geopolitical strife. Now, the market doesn't trade it that way. Unfortunately, if you take a look at correlations, Bitcoin is most highly correlated with the NASDAQ. Obviously, the stock index, that is very, very tech heavy. And so the market trades Bitcoin like a tech stock, but in actuality, it's supposed to trade like a hedge against not just monetary debasement, but because it's politically neutral and decentralized, geopolitical uncertainty as well. Kind of the same role that gold plays, right? People jump into gold not just for inflation concerns, but also for geopolitical concerns. You're seeing gold rally and do extremely well right now as a result of that. Bitcoin won't necessarily be the beneficiary of those flight to safety flows just yet, because it's still tightly correlated with tech stocks. I believe that as Bitcoin's market cap approaches the market cap of gold over the next 5-10 years, then you'll start to see Bitcoin reserve asset has caused its stock price to more than 10x. And now you're starting to see imitators. You're starting to see people like Semler Scientific and other non-public entities, other private companies begin incorporating Bitcoin onto their balance sheet. And so while there's a great deal of utility for AI and blockchain when it comes to integrating that into corporate functions, I do believe that the real killer app of Bitcoin and other things out there is the value it holds as a reserve asset, right? The outsized returns it provides in an environment such as this one, and truly in any environment, right? Bitcoin invented absolute scarcity, but it also invented digital ownership. And so the ability to not just have an absolutely scarce slice of the pie to preserve the value of your balance sheet, but also leverage that balance sheet in order to provide returns for investors, it really is Bitcoin's future killer app. I do think that over the next year and over the next half decade as well, Bitcoin becoming a treasury reserve asset is going to become much more mainstream as people see the value in it from people like MicroStrategy, Semler Scientific, and others. And I do think that the evolution of AI and the integration of AI into day-to-day functionality is going to drive that shift as well. Yeah, the Bitcoin ETFs have had record-breaking inflows when they launched at the start of the year, and the Ethereum ETFs, frankly, their launch was quite disappointing, according to Eric Balchunas and James Seifert, the ETF analysts over at Bloomberg. And so you look at the disappointing launch of Ethereum relative to Bitcoin, it suggests that institutions want a piece of the pie when it comes to Bitcoin, not necessarily Ethereum, and that's corroborated further by the price action in both of the spot markets, Ethereum declining relative to Bitcoin. And so, frankly, I think if we're talking this global easing cycle that's commencing, this massive wave of monetary liquidity that's coming onto the table, I think more investors are not just recognizing Bitcoin as a solution, but more institutions are recognizing Bitcoin as a solution as well. And so just judging by the price and the ETF inflows, that suggests to me the value here is an absolute scarcity. So the value here is Bitcoin.
Yeah, interesting. And at these levels, Joe, before I let you go, at these levels, I mean, how high are we going to go before the end of the year? It seems like we're setting up for a nice little run here. What's your outlook? What's the projections there?
It does, absolutely. So ceteris paribus, as long as these conditions hold that I just discussed, the global easers that play into it, but I think the extremely favorable macro backdrop coupled with Bitcoin's own native strength, I think you see Bitcoin rally very hard into Q4.
Yeah, institutions are certainly watching. All right, Joe Consorti, head of growth at Thaya Bitcoin, joining us today. Thanks for this, Joe. I appreciate it. I think we've got into some good areas of discussion. With lots to come this year. Let's see if we can get to that 90,000.
Let's see. Thanks again, Jeremy.
Appreciate it. I'm Jeremy Saffron for all of us here.